Hello everybody, this is Greg Gossett with Gossett Trading and Mentoring Live, and today is Friday, June 28th, 2019. We are now in the final trading hour of the day, and we are now also in the last trading hour of the week. As many of you know, it is my opinion that the closing prices of the day are the most valid prices of the day, and therefore the best prices to make the majority of my buying and selling decisions. So we're going to take a look at the end of the day and take a look at the closing prices, and that's where I'm going to possibly enter new positions and possibly exit positions. So anyway, let me just make sure everybody is on and can hear me. Hey, Johnny's there. He can hear me. How you doing, Johnny? Good to see you, my friend. Thank you so much for coming by. As always, I really do appreciate it. All right, well, let's just take a quick gander at the indexes and see what's going on. So the Dow Jones is up 15 points, was up much higher earlier. So it has been selling off throughout the day. The NASDAQ is up 20 points, just about 1/4%. The S&P is up 7 points, about 1/4%. And the IWM, which is the Russell 2000, that's the big winner on the day as well. It was as yesterday as well, but that's up 1.38%. So that's really where the movement on from the indexes are. So all right, so here's the plan for today. As always, first we're going to run the U.S. legal disclaimer. Then we're going to come back. We're going to take a look at my current positions, when I bought them, why I bought them, how I'm going to manage them going forward. Then after that, we're going to take a look at some word of wisdom quotes from famous traders and see if we can learn a little something from that. Then we're going to go to down my watch list. We're going to take a look at each stock in my watch list one by one. We're going to analyze the technicals. We're going to look at support levels. We're going to look at resistance levels. We're going to look at moving averages. We're going to look at possible, we're going to look at ATR channels and how those are holding up. We're going to look for possible V1, V2 entries. And then if we find something that fits all of my criteria, again, using the closing price, I will use that price to make my decision whether to get in and out of the trade. And then if that's not enough, we're going, after the market closes, we're going to do some questions and answers. So if you have any questions about anything I've said during the live stream, feel free to type them into the chat and I will do my best to answer them. If you want me to take a look at any particular stocks you have or symbols, I'm happy to give you my opinion. Or, if you just want to ask some questions about trading in general, or maybe mention some issues that you're having, maybe I can be helpful in answering and coming up with some solutions with some of the issues that you're having with trading. So how's that sound? All right, so let's take care of the U.S. legal disclaimer, get that out of the way, and I'll be back in about 40 seconds. So hang tight, please.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay, so first thing we're going to do is we're going to take a look at my current position, see how we're doing, and see how I'm going to manage these, why I got in, when I got in, and how I'm going to manage them going forward. So, all right. So first of all, Goldman Sachs. This was a nice trade for us today. I did enter this trade yesterday on June 27th. And why did I enter it? Well, for two reasons. One, we closed back above the 200-day moving average, which for Goldman Sachs is a good quantified, profitable, back-tested system of holding, of entering Goldman Sachs on a closing basis above the 200-day moving average and getting out below. In addition to that, we did also trigger a fractal back on the 624, where you have a high with two lower highs to the left, two lower highs to the right. So there were two triggers for me: the close back above the 200, the close back above the previous fractal. And kind of what put the cherry on the top for this trade was it was a bit higher than I would have normally liked it. I usually like to ideally, I like to take my trades within the 1 and the -1 ATR channel, but the reason that I did take it was that my initial stop was a close under the 200-day. So it did give me a good risk to reward ratio if I'm wrong. Look, just because something closes above the 200-day does not mean it's going to go up. You know, technical analysis is not predictive. It doesn't predict things, but it gives you a context of how to manage a trade. I mean, that's really what it comes down to. So yeah, I did like that the 200-day moving average was halfway of yesterday's bar, and that if I was wrong, any close below the 200, even a penny below, I would have gotten out. So, you know, my theoretical stop is somewhere in this range, and my potential profit target, you know, is at least 2 to 3 times that. So I did exit 3 profit targets today. I did exit about 36% of my position. I did put 1 profit target here, 1 here, and 1 here. It did open up here, so I got some positive slippage, and so I got 2 of my profit targets right here at the open, and then I did hit 1 more profit target later on in the day, and it's actually now higher. I did get out of that last portion higher than where it is currently right now. You know, how to manage this trade going forward? Well, the blue line up here, with my little what if tool, I can move this around and let me know, hey, where's the 70 RSI on this trade? So the 70 RSI is approximately where that blue line was. So if it had tested that 70 RSI today and then closed back below, I would exit the trade. I would just flat out exit the trade for a one day nice 2.28% trade, but it did not test the 70 RSI. So I don't like the action of this bar. We're working on a kangaroo tail, a negative kangaroo tail, which means it opens in the bottom, goes up, and then currently right now, you know, it's kind of closing in the less than 50% of this bar. I mean, the day's not over, so we're going to have to see how this reacts, but this is what I'm thinking. Because it did not close, it did not test the 70, that's off the table. But if it closes back in the 3rd ATR channel, because see, we went above the 30 ATR channel. If right now it's still above the 3rd ATR channel, if it closes back under the 30 ATR channel, I'll just go ahead, call this a really good trade, 1-day trade, and be done with it. So that's my plan. If it does close above the 3rd ATR channel moving forward, then I will use a close below the low of the gap up day here as my alternative stop. So again, if it closes under the 3rd ATR channel today, I'll just go ahead, take the nice trade, and be done with it. If it does close above the 3rd ATR channel, then I will use in the coming days, I will use a close below today's low. And if it keeps moving up, great. I'll phase out of more positions. If on Monday, for instance, it tests the 70, closes back intraday, closes back below, that will be my exit. If it tests the 70, closes above the 70, I'll keep it and continue to phase out until it closes back below the 70 RSI. So I hope that makes sense. This was a really good trade, made for a nice profitable day so far on the P&L. So definitely happy with that. Hey, Steve Burns is here. Hey, Steve, how you doing? Good to see you, my friend. Thank you so much for coming by. It's always an honor to have you in our group. Um, Goldman Sachs worked well for us. I got in on the 1050-day cross. Looks like it failed at the 70 RSI this morning. Yeah, I saw your entry not yesterday, but the day before. Um, on my charts here, not saying that mine are the absolute of the absolute. Um, See, on my chart here, it said 69.59. Didn't quite test the 70, but of course, maybe everybody's chart's a little different. I don't know if you just heard my plan, but my plan was if it closes under the third ATR channel, that's where I'm going to exit. If it continues to close above the 30, I'm going to keep it and then use a close below the gap up day. So that's kind of my plan. Always great to have you here. Thank you, Steve, for that mention today on your Twitter, on your Friday follow list. That's awesome, as always. It's an honor to be in that list. William, hey, buddy, how you doing? It's good to see you. Thanks for coming by. Always nice to have you here. Always nice to have you here. Hey, stick around, Steve. I'm going to do some words of wisdom after I go through my positions, and it's based upon one of your posts. Steve says, I agree, it failed under the 70. Okay. All right, good. Good. Didn't hit the 70. Okay. So next position, the Qs. We have had this position for a long time, everybody. And I am not complaining because this has been a really great trade. I did go long the Qs back on June 4th when we closed back above the 250-day moving average. The previous day we closed under the 250. On the entry day we closed above the 250. That is why I entered this trade. There's a good long-term back-tested quantified approach on trading the Qs, and that is basically stay out of the Qs when it's under the 200 or the 250 simple moving average. Enter the position, stay in the position as long as it's over the 200 and or 200 and the 250-day moving average. So on this particular day, it did close back above both of them, which is a good sign. We also had a V2 entry. Here's day 1, day 2, day 3. Day 2 washes out the low of day 1 by at least a quarter ATR. Day 3 closes back above the close of the ATR close of day 1. So that's another reason I took it. Another reason I took it, it went from under 30 RSI. On the entry day, it closed back above the 30 RSI. So the market showed us that there were not any more sellers interested under the 30 RSI. We also went under the third ATR channel, closed over the third ATR channel. So there were a lot of signals there. I did take a full position on this trade. You can see it's moved up nicely. I like to phase out of my positions as the market moves my way. So I phased out, had some sidewards movement, didn't phase out, phased out. Then we had a little drawdown. I think I hit one profit target yesterday. So I only have about 10% of my position left on this trade. So it's not anything that concerns me, but because this is a mechanical trade, I'm going to trade it like a robot. I will continue to phase out in the coming days to the upside if it goes down. If it goes up, and if it closes below the 250-day, that will be my stop. That will be my signal to get out of my remaining 10%. So I'm pretty sure, although we never know, that even if we do go into a downtrend, we'll probably have some counter rallies that will probably get me out of the rest of the shares. But this has been a wonderful trade, and it's a good example of a mechanical trend trade based upon entering a position, entering the QQQs over the 200 or the 250-day moving average, staying in them until it closes back below. All right, SPY position. All right, so I'm going to go over this quickly just in case we have some new viewers today, but I do buy the S&P every day at the close religiously, and I sell it first thing in the morning. So why would I do such a thing? So it's based upon this back test. This was actually posted by Liz Ann Saunders. She's the chief investment strategist over at Charles Schwab, if you didn't know that. And it's Bespoke Invest, at Bespoke Invest is the one that did this back test. But since 1993, if you would have bought SPY on the open in the morning, sold it on the close in the afternoon each day, you would have actually returned a negative 5.2%. But if you did the opposite and you bought the SPY at the close in the afternoon and sold it first thing the next day in the morning on the opening, you would have returned 568%, meaning that more than all performance in the SPY and the S&P 500 since 1993 came in after hours trading. It's kind of hard to get your head around that, isn't it? But that's what the numbers show. So, the green line here is the buy in the afternoon, sell in the morning. The red line is the buy in the morning, sell in the afternoon. Since 1993, this is up till 2017. You can see it's very clear that the gains in the S&P did come in the after hour and the pre-market, and then was sold into at the open of the day. And I know there's day traders out there that do it, they do it successfully, but the only point I'm trying to make here is that the majority of the movement clearly comes in the after hours. It doesn't come during the day. And as a day trader, that is when you're trading in the day. So there's more movement overnight. There's it's a clear edge holding your positions overnight. This was done up until 2017. The numbers were negative 5.2 and positive 568. This was a more recent study up until January of 19. The buy in the morning, sell in the afternoon, at this point went from a negative 5.2% to a negative 13.9%. And the buying in the afternoon, selling in the morning went from plus 568 to plus 632. And then Stephen Burns was nice enough to do his own analysis up till about, I think he did it about 10 days ago. And the number went from 634.2 now up to 712.63 as of about 10 days ago. So pretty impressive. So with that being said, that is why I did buy the SPY. You can see I bought it yesterday at 291.87, and we did have a nice gap up, sold it at 292.57. So this is a trade that I do every day. I take the long-term view on this, just as basically a long-term trade. There are ups and downs with this approach, as with any trading approach. So always remember to position size properly, maybe a 5% position size, a 10% position size of your total capital, because you are going to go through drawdowns, and it's hard to go through drawdowns when you have large positions. So this works long term. Position size correctly so you can stay with it long term. Hey Mount Doji, how you doing? Finance did great today. XLF is holding up still. I know, I was watching that for you. I remember you took that yesterday, so congratulations on that great trade. I would have taken that trade, but I took Goldman Sachs instead. So, they're in the same industry. I didn't want to take both positions, but if Goldman Sachs had not triggered, I would have taken that trade as well. So congratulations on that. Glad that worked out for you. All right. So that's the SPY. Did have a nice profitable trade on that. Again, it is now lower than the open of where we sold it. So, we've had some great trades, just in the last 4 days. Buy at the close, sell at the open profit. Buy at the close, sell at the open profit. Buy at the close, sell at the open profit. So it's been good. It's been a great month for this system, but I got to tell you, May was horrible using this system. So again, overall, I've started in February 26th is when I started using this, and definitely have a nice P&L on this. Definitely have a nice profitable P&L, but always be careful. All right, TLT. This is a trade that has not worked out, but I do want to show you the setup of why I took this. So here we have a high. We moved back down. We made a higher high. Do you see how high the MACD bars are here? How long, how tall they are? Well, this second high, there were no green bars. This is what Dr. Alexander Elder, whom I've studied with, taught me, and this is called a double top with a bearish divergence. So I did not take this short here. I waited for it to have an attempted rally after we have a double top with the bearish divergence. I wait for that reaction rally, and then I did get short back here on the 26th of June when we triggered this V2 to the downside. Day 1, day 2 washes out day 1, day 3 closes below day 1. But it immediately reversed on me. My stop yesterday was 132.92. It just barely kept under the stock, so I kept the short. This morning it did gap down. I did hit one profit target to the downside, which was nice, about 20% I took off the table. But today, if it closes back above this line, and this line is actually halfway of the washout bar, it's not just a random line. Halfway of the washout bar, a close above is generally my stop. So this is going to be a small stop. This was a counter trend move, and when I have counter trend moves, I always take a 1/2 position. So I am glad that I took a 1/2 position on this trade, obviously, but still, you know, very small loss, but that's how it goes sometimes, right? But small losses are allowed. All right. What did I do now? Okay. A couple more things quickly. I did want to share my puts with you. I do sell puts occasionally. This is AMD. When I sell a put, you know, you want to pick a price where you find some support in multiple time frames, because, you know, with the put, if the price stays above your strike price at the end of expiration, you are able to keep all the premium. If it goes below, closes below, you are required to buy at that price. So you better pick a price that you really want to buy this. So my technique with this is I have to look at a stock in 3 time frames. It has to make sense in all 3 time frames. So I picked the $24 level based on the monthly chart, based on the 1 ATR channel. We're above the 1 ATR channel, so we should have some support here. Doesn't mean, but it's going to, obviously, but you know, I do want to at least have a plan, and I do want to base it off something. So I picked the $24 level on the monthly. On the weekly, the $24 price lines up with the 50-week moving average and the negative 1 ATR channel, which is good. There should be some buyers coming in at those levels. And then on the daily, I picked the 30 RSI, which is above the 250-day moving average. As long as AMD stays above $24 by expiration, which is July 19th, I will be able to keep the entire premium. I also did sell a put today on Etsy, and I sold it at the $55 mark. And why did I sell it at the $55 mark? Well, on the monthly, it lines up close to the 1 ATR channel, so we should have some support there. On the weekly, it lines up with the 50-week moving average, so we should have some support there. And then on the daily, it lines up with the 30 RSI. So I have confirmation in 3 time zones, basically, right? 3 time frames that $55 is probably a pretty sweet price to enter this at. I mean, I don't want it to go down there. You know, I don't want to own the stock. That's not why I sold the puts. I sold the puts to get the premium. But if it does go down there, I'm comfortable with that area. But be careful. Selling puts is, you know, it's dangerous if you don't know what you're doing. I take small position sizes on this, but you know, selling puts is one of my profit centers in my trading. All right. All right, so I wanted to quickly go over a post that Steve had because it really spoke to me. It says, "In trading, it's hard to teach." All right, pulling the trigger on an entry, critical thinking, creativity, mental discipline, perseverance, humility, doing the research work, judgment, mindset, passion, avoiding bias, managing risk. Some lessons have to be experienced through losses. So, a lot of people think that trading is just about finding a good system and that's it. It's their holy grail. They'll just go ahead. When it's buy, I'll buy it. And when it's sell, I'll sell it. It doesn't work that way. These are literally all the mental things that you have to deal with every day. And I'm not kidding. Pulling the trigger on the entry. People have issues with that. Critical thinking. You have to think critically. You have to have creativity in how you design your systems. You certainly have to have mental discipline. You have to persevere because it's not always going to go your way. You have to have humility because the market's going to kick your butt sometimes. You have to do the research. You have to analyze your charts. You have to have good judgment. You have to have the proper mindset. You have to have a passion for trading. You have to avoid bias. There's a lot of biases that you can have in your outlook on trading and obviously managing risk. So, I talk about this every day, everyone, and I'm sure some of you get sick of hearing it, but my job here with this podcast is to help you become better traders. And in my opinion, 90% of being a successful trader are dealing with these issues. And here he says some lessons have to be experienced through losses. You start figuring these things out when you've had losses. When you start trading, if you just start kicking butt right away, you don't even think about these things. When you get beaten down, that's when you think of these things. So remember, everything with trading is mental, encompassing all of the things here that Steve said. So, remember, be disciplined, position properly, be humble, don't get cocky, be open, use good judgment, all the things Steve said here. And listen, if you don't follow Steve Burns on Twitter, you're doing yourself a major disservice. He has the best Twitter channel out there on trading and financial things. It's at @SJoseph Burns. Do yourself a favor, subscribe to that channel, read everything he posts. Literally, make a goal, read everything he posts for a week, and you will be a better person and a better trader. And he also, where did it go? He also has a great website, newtraderu.com, where he posts good articles. He has a 3-time-a-week market analysis in one of his offerings. He has great courses. I've learned so much from Steve. I owe so much to Steve. So, I do want to mention his website because it was helpful for me. I know it will be helpful for you. And then also at @SJosephBurns on Twitter. So I wouldn't recommend this stuff if I didn't 1,000,000% believe, and I do. So, all right. And he's in the chat today, which is awesome. All right. Hey, Andy, how you doing? Good to see you. Steve says, so much more to trading than the math. It will test you like nothing else on many emotional levels. That is the truth, Steve. Yeah, and it'll make you a better person too if you can master the challenges that you're going to have. The good news is the rewards on the other side can be life-changing. That is true. Absolutely true. All right. Well, let's take a look now. We went through our positions. Let's go through and see if we can find anything for today. I've been always running out of time at the end of the day, so I'm going to try to hurry it up a little bit so I can make sure I finish before the end of the day. Apple. All right. So Apple, it's had trouble with this $200 range. Today we've made a lower high and a lower low. We've gapped down. Really nothing on Apple here today. With like a lot of stocks, I need these to pull back into the value zone. Quit going down, ideally move sideways, and then look for a spike down and reversal. Look for a V1, V2 entry. And if you don't know what a V1, V2 entry is, or you'd like to learn more information about it, I did a video on YouTube. It's on my YouTube channel, and there's also a link to that video in the description of this live stream. of this video. But do yourself a favor. V1s, V2s, very important part of my trading. So if you'd like to learn more about them, take a look at that video. And if you have any questions, you can always email me. My email's in the description, and then also you can message me on Twitter. So nothing on Apple today. Advanced Micro Devices. I do have this. I sold the puts down here. I can't even remember now. Way down here. So about 20% protection down to 20% protection down here. So nothing on Advanced Micro Devices. Amazon's down. I guess it's been going down all day long, so nothing here for me today. At the very least, I'd like to see it test the 50, and based upon the G20 meeting this weekend, that may happen. We may really have an opening on Monday that's much higher or much lower, so let's keep that in mind. Know there's going to be some volatility, and be careful. Boeing. Well, Boeing has come down. It has found some support at the 200-day moving average. It's not really of interest to me until we close under the 200, maybe back over the 200. This is a good example here of a double bottom with a bullish divergence. Here's the bottom. We have a rally. We make a lower low. You can see this does go lower than here, but the MACD bars are more shallow. That is a bullish divergence. We did also go below this range, close back above this range. I did buy it here, did sell it up here just for a 2 quick day trade, but just an example of a double bottom with a bullish divergence. Dr. Alexander Elder, his opinion that these double bottoms with bullish divergences or double bottoms with bearish divergences are one of the most powerful approaches in technical analysis, and I use them all the time. So, but nothing for me today on Boeing. Alibaba is also moving down today. Probably people getting on the sidelines ahead of the G20 meeting. For me to be interested in Alibaba, probably down here at the 1 ATR channel that dovetails with the 20-day moving average. But based upon the G20, this could go skyrocketing up or down. So I really don't want to get involved with that before the weekend. Here's Caterpillar. You guys remember, right? I talked about Caterpillar here on a close above the 200-day. I did not buy it here because of it was too high as far as the RSI goes, but I mentioned back here on this day, these high RSI moves above the 200, I swear I see a move up all the time, and that's exactly what happened. But I don't have it, but I'm certainly not going to buy it up there now. Canopy Growth, nothing really there today. Cisco. So, I've been talking about Cisco wanting it to come back down into the value zone, but it was in the value zone yesterday, but just because it's in the value zone doesn't mean it's a legitimate buy. Big picture, I want it to go into the value zone, right? We have a higher high and we move back down. This is where I'd like to see the stock start finding some support, stop going down, showing that there's not a lot of supply left, consolidating, moving sideways, and then looking for a spike down, a reversal on a V1, V2 to enter you into the trade. So that has not happened. It has not moved sideways. You can see there's continuing big bars. If the bars start narrowing, moving sideways a little bit, that will be the first indication that possibly we're running out of sellers. And then, so if we can move sideways here for a while, attempt to go down below the 100-day, close back above, that might be possible entry for me there, or even a 30 RSI. It's probably down here somewhere. But so nothing on Cisco today. DDM is the double leverage Dow. There's really nothing here for me today. I did take a trade on DDM. We were talking about the Qs under the 200, under the 250, back over. I did enter the DDM here. This is the double leverage Dow with the close back over the 200-day moving average. This was not a mechanical trade. This was a discretionary trade, meaning that I could get out if I see some price action that I don't like. You can see it did move up nicely, moved sideways, scaled out all the way to right up about here, and got rid of all of my shares, which was the right place. So that's a great entry, but just a good example of, again, back-tested system of staying out of the DDM under the 200, going in the DDM over the 200. Here's the Dow. This is the regular Dow. It's going to have the same formation, so nothing there. Would like to see this pull back into the value zone at the very least. Walt Disney, you know, we made this higher high. We've come into the value zone once. Now we're in here again. Going forward, I'd like to see this moving sideways. You're going to hear me say this a lot, but it is in the value zone. That's good. But I'd like to see it start moving sideways. Show me that there's no more sellers, and then one attempted move to the downside and reverse back up. That would get me into the trade on a V1 or a V2. Here's an example of a trade we took back on June 3rd with a V2. Here's day 1, day 2 washes out day 1, day 3 closes above day 1's close, happened in the value zone, and you can see that was a great trade for us. About 4-day trade, phased out, got out of the trade here, waiting for a pullback, but it did come into the value zone. It pulled back in the value zone, but I did not get a trigger. So nothing on Walt Disney. Etsy, we talked about. I did sell a put down here at the 55 level today. Ford Motor Company did have big move yesterday. I would have bought it here. Here's day 1, day 2, day 3. If day 3 would have closed over day 1's close, giving me a V2, but it did not confirm at the end of the day, so I did not take this trade. And that there's nothing here for me today. Facebook, I know Steve had a great trade down here when it bounced off the 200-day moving average. I think up to about here is where he held it, I think. So it's moving sidewards here. Nothing there. 5 below, you know, we do have this double bottom, but instead of a bullish divergence, we actually have a convergence, meaning that the momentum of this second move was stronger than this move, which is bearish. So nothing on 5 below today. You know, the first thing that would get me interested in 5 below is a close above the 200. And so I know I'm going through these pretty quick. So, you know, if you have any questions, just write them down, and then we can take as much time as we need after the market closes. Gold. Gold had a big move up. We've had a pullback, but at these levels, I would not be interested in buying it or selling it. I want to see something more conservative. This big move skews the charts, but I did enter gold back here on May 30th when we had a 520 EMA cross, which is a good, legitimate, profitable, long-term trading approach for gold. We also took out this fractal. Here's a fractal is a high with 2 lower highs to the left, 2 lower highs to the right. We did take that out on the same day. It happened within the channel, which I like, and that was a beautiful trade up to about here, I believe. We almost got the top. So that was another good trade, but I didn't buy this second dip. Google, nothing on Google today, although in the future, there is a good back test on Google, which is the 1030. Do I have this? Yeah, the 1030 cross, which is a good back-tested approach, crossover system for Google. But the red line here would have to cross back over the blue line, so the 10 would have to close back above the 30 before taking that. So nothing on Google today. Goldman Sachs, we talked about. We did phase out of about 36% today here, so I will hold this today as long as it holds above the third ATR channel. If it closes below, I'm just going to go ahead and exit. And in the coming days, if it continues to move up, I'll continue to scale. If we have in the subsequent days coming, if we have a close below today's low, that would also be an exit signal for me. IBB did have a close back above the 200-day moving average. I don't think I'm going to take this one. I don't like the downward sloping 200-day, so I'm just going to let this one go. Intel is having some problems with that 200-day moving average. Even if it does break above the 200-day moving average, it concerns me because the third ATR channel is there. But anyway, we don't have to make a decision on this because it is under the 200-day. All right, so here's the Russell. I will be entering the Russell today, and this is based upon a good quantified back-tested trading approach when the 10 SMA crosses over the 50 SMA. This is one of the best back-tested index approaches, but you can see the 10-day was under the 50 for all this time. Now, most likely it's going to close above the 50. The 10 is going to close above the 50. That is my exit point. And I can show you the back test real quick here on etfreplay.com. I use this by permission from etfreplay.com, but this back test is since January 2000 with the 10 SMA closing back over the 50 is your entry. The 10 SMA closing under 50 is your exit. So you can see buy and hold, just buying and holding during the same period returned 274.5%. But the 1050 crossover system returned actually 319.4%. So it was better than buy and hold. But the drawdown on the 1050 cross was only 21.7, where the drawdown on buy and hold was 58.6. So not only did it return more, it had a third of the drawdown of buy and hold. So I will be buying the IWM at the end of the day for sure. Now, I am going to trade this mechanically. I'm going to trade it like a robot, but I am making a discretionary decision on my position size. I am not going to take a full position size here today. And the reason why is we've had two big strong days up already. We do have the previous high up here as resistance. So I am going to take a 1/2 position size here today. And in the coming days, if I can get a better entry, that's when I will add my second position size, because if it continues to keep moving up, I want to have something. But my opinion is, it doesn't have to be right. It's just my opinion that after a couple big strong days like this up against here, there is a good chance that we could backfill a little bit, and that's where I would add my second position. So I will definitely be entering the 1050 SMA cross today, 1/2 position based upon that back test. Okay, Coca-Cola. I have been waiting for Coca-Cola to move back into the value zone. We have done that. This is a pretty big bar today, though. Going forward, I'd like to see this move sideways or slightly drip down and then wait for a V1 or a V2 entry. We could possibly have a V2 entry on Monday, because here we've moved up, we've come back down in the value zone, we have a couple days of sidewards movement. Today, we have washed out yesterday's low. If it's strong enough on Monday to close back above day one's close, I will re-enter this position, but if and only if that happens. So nothing today on Coca-Cola. Lockheed Martin has been strong. It's been holding into this new range. This was the previous range. We've moved up here. We've stayed up here. We've closed up here on a closing basis in the new range. So in the new higher range, this used to be the resistance. We've moved up through it. Now that becomes the support. And you can see it has tested that support 1, 2, 3, 4, 5 times in a row. So it's a 67 RSI. I wouldn't be buying it here, but it is holding that higher range. Here's an example of a V1 that we took back on May 29th, where we made a higher high. We came back down into the value zone. We moved sidewards. We spiked down below the previous day, and then we closed above the previous day's close, or day one's close. So this is a V1. I did enter Lockheed Martin here based upon everything I just mentioned. Made a higher high, came down, moved sidewards, attempted to go down, reverse back up. When you attempt to go down and reverse back up, the market's giving you information. It's telling you that the market did not like prices that low. So, you know, if you get a recent rejection, there's a fairly good chance it will go the other way. And it's exactly what happened. You can see this was a great trade. I wrote it up right up to about here. So it was a wonderful trade. MasterCard. Did come back into the value zone. It's a lower high, which when I have a lower high back in the value zone, I needed to wash out that previous low for me to get interested. So really nothing here. We did short MasterCard back here, a different system, but I did short this when we went above the third ATR channel and we closed below. We went above the 70, closed below. It was a good short, as you can see, but we moved into the value zone. We started to go sideways. Here's day one. Day two washes out day one. Day three closes above day one. That's my V2 entry signal. Moved strongly the next day. Got out of about 30% of the position. Got out of another 12% position here. So almost 50% here. Next day, moved down on us and got out of the trade, but definitely a profitable trade because we locked up half of the position up here. So nothing on MasterCard today. 3M. Here's a V2, right? Day one, day two, day one, day two washes out day one, day three closes above day one. But I wouldn't take this because it's not within the channel. I like the V1s, V2s to happen inside the channel. Merck has had a nice run up. We are coming down into the value zone. That is good. Like to see this move sideways, and then again look for a V1 or V2 entry to go back and possibly test those highs, but nothing today. Microsoft, same pattern. We're looking for it to come back down into the value zone, so nothing there today. Netflix. Nothing on Netflix today. Nike had earnings, is down a little bit today. It was up and down, but we are back in value, but no setup on Nike. Philip Morris, we did take a trade on Philip Morris on this V2, and this closed back above the 10-day. Next day it went boom our way. Next day it tested the 50, closed below. We exited there, but that was a nice trade. But we're moving sideways here. We're really moving sideways. We're kind of making this pennant. I believe this is going to break out one way or the other, just not sure which way. Based upon this big bar up here, my guess, and that's all it is, would be to the upside. But you know, we don't make our trades based on guesses. But you know, if this with this sidewards movement, if we do have a big move back up above the 200, I probably would buy that in the coming days. PayPal is potential for today because we moved up, we've come back down into the value zone, we've kind of started to move sideways. Here's day one. Day two washes out day one. Now I need day three to close above day one's close. Day one's close was at 114.15. Right now we're at 114. So if we get a strong close back above 114.15, I would take this because of the higher high, the move back down into value, the sidewards movement, the stab down, but I need the trigger now. I need the trigger to trigger me into the entry, and it's not there yet. So we'll watch that one. The Qs, nothing there. Move up today in silver. This is a V2, day one, day two, day three, but it's too high. It's too high above the channel for me to take. The SPY, we'll be buying that at the end of the day as usual. Square, you know, it looks like it might close above the 200-day, but I don't like this big bar here. We're still up in the range of that big bar. It's a downward sloping 200-day moving average, so I think I'm going to pass on that. Whoa. We did have an excellent trade. You know, this is an example of waiting for a trade that has a lot of things going for it, but That's another good example of a double bottom with a bullish divergence. Here's the first low. We rally. We come back, make a lower low. The MACD bar readings are very shallow compared to the previous move down. It denotes that it's running out of momentum. The next day shoots back up, goes out from this new range back into the old range, triggers a V1, V2. Triggers a V2. Here's day one. Day two washes out day one. Day three closes above day one. That's the trigger. In addition to the double bottom with the bullish divergence, the false breakout to the downside, and the strong move up. And we rode that all the way up to about here. It was about a 14% win on that. So that was an excellent trade. But nothing there today. SSO, double leverage SPY. I don't see anything there. AT&T moving up nicely. It's a 70 RSI, so it's too high. The TLT position, I will be getting out of this for a loss. They close back above my stop of 132.92. So I'm going to have to watch that at the end of the day. Tesla is moving sideways, kind of starting to form a pennant. This will probably move one way or the other. We just don't know which way, and we don't know when. Natural gas, nothing there today. Oil, tested that 200 a couple times and failed pretty strongly today. I think there was some news on oil today. The dollar has moved down strongly. That 100 upward sloping 100 day was some support. It sliced through it. Now it's acting as resistance to the upside. Visa moving sidewards in the value zone. In order for me to get interested in Visa, I needed to come down a little deeper into the value zone. So if I get a V1 or V2 trigger, it triggers within the channel. VIX has been dripping down for a few days. Verizon is holding here. I did buy Verizon here on this V2. Day one, day two, day three. Day two washes out day one, day three closes above. Then it did go up. I think I hit one profit target here, and then it just dumped on us. So that was a losing trade, but it looks like we are holding some support at the 100. Energy up near the 100-day moving average in the third ATR channel, so nothing there. Financials, go Mount Doji. Hey, after in questions and answers, I'd really like for you to explain to the group, Mount Doji, if you're listening. I'd really like to explain how you're going to manage this trade going forward. Beautiful trade for you, really beautiful trade. But be interested for you to tell us how you're going to manage it. Get your opinion. Real estate, I don't like real estate here. We had this big down bar, boom. We came back up to about the halfway of this bar. Intraday, you see this V2. Here's day one, day two, day three. Day one washes out the V2 to the upside. Day three, bar three closes below. That's a decent V2 to the downside. And at the same time, on the day, this is on the 39-minute chart. This is intraday. But on the daily, I like it because it failed at the halfway, and it also failed at the 50 RSI and closed below that. So, that's, if I do take trades intraday, that's how I view them. XLRE, nothing there. And healthcare, like to see that back down in the value zone. So, I'm running a little short on time. So the only possible things for me to look at today are IWM. I will be buying that here at the close. And PayPal. I'll have to watch that. It does look decent right now. So I have 5 minutes. I'm going to go ahead, buy my 1/2 position in IWM, which is the Russell 2000. That's based upon the 1050 SMA cross. I am buying a 1/2 position, however. All right, so let's get
order partially filled.
All right, that is in
Order
one
filled.
account. Remember, this is a half position for me. I'd like to see it come back a little bit and backfill to add my second half.
Order partially filled.
All right.
Order filled.
155.88. And then, let's see. $155.88 is my entry there. All right. Goldman Sachs does look okay. SPY, I am going to buy that. So let's just go ahead and get the SPY taken care of.
Order filled.
Okay, so this is my end of day SPY trade.
Order partially filled.
And we got
Order filled.
filled at 293.06. So that's my new entry for today. TLT. Hey, it's closing below. We're going to be able to keep that bad boy. And PayPal does look like it is closing. So that is a legitimate V2, at least at this point. So I am going to go ahead and buy PayPal. That will be a full position. And it finally gives me some exposure to tech. I have not had any tech for a while, which has actually been a good thing.
Order partially filled. Order filled. Order partially filled.
All right, PayPal, we got
Order
filled at
filled.
114.59. And it should be very interesting to see what happens here at the end of the day, everybody. You know, I'd like to show you the 1 minute. So I have all my positions. All right, so still have Goldman Sachs, do have IWM, did buy PayPal, and the bonds are closing. Looks like it's going to close under my stop, so I will be keeping that. But I do want to show you. You know, I talk about the end of the day, how much, where all that buying and selling comes from. Let's just look at this during the last hour of the day. So each bar here is a minute bar. You can see the volume is starting to pick up now in the last part of the day because that's when the professionals trade. So let's watch this in the last, this is now the last minute of the day. I want you to notice the volume. If we went back and looked all throughout the day, you would see that the volume was very, 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 very light. And see, these are the professionals, the hedge funds, the financial companies coming in at the end of the day with the big volume, making their decisions just like we make our decisions near the end of the day. So watch this bar here in the last minute, in the last 10 seconds.
Order cancelled.
Look at that volume in the last minute of the day. That's why we trade the last minute of the day, everyone. All right, well, let's take a look. Well, we had a nice profitable day today. I am really happy for that. Um, it's been a good week. Whew, yeah, I'm glad the trading week's over. I'm glad. I'm looking forward to the weekend. Anyway, if any of you have any questions or if there's anything I can help you with, please go ahead, just type it into the chat. Don't be shy. But before I get to the answers, let me just put in a quick plug for myself, let you know that I do offer private one-on-one coaching and teaching and mentoring lessons in the evening time via Skype. I love to teach. I've had really good success with my clients. I've taken some that have really lost a lot of money and I've really turned them around. The lessons are pretty intense. Of course, I teach you all the principles that I know, but then I turn it back around on you and I basically throw lots of questions at you, try to throw you curveballs, and basically have you teach it back to me. Because if you can teach it back to me, then I know that you'll know it. So it usually starts just with a free phone call, just so we can get to know each other a little bit better. I'd like to learn more about you, how long you've been trading, how you trade, what approaches that you trade, what kind of issues or challenges that you're having, and then I'll customize a lesson plan for you that will fit your personality, fit your time frames, fit your availability, fit your financial situation. So if that's of interest, please reach out to me. My email's in the description of this video. My hourly rates are as well, or you can reach out to me on Twitter as well. And then if you like this channel, please subscribe. If you like this video today, please do me a favor. Hit the thumbs up button. It does help with Google. It helps Google get the channel out to more people and make them aware of it. There are a lot of people out there that have a really tough time with trading, negatively affects their life, and I'd really like to help them, and I think this channel will help them. So with that being said, that is the end of my plug. So let's get to questions and answers and see if anybody has any questions for me today. So Mount Doji says, I was using the 10-day MA as my stop if the trade went down. I phased out some profits after going through the first ATR. I'm eyeing the second ATR next. It's good. It's a good way to do it. That's how Kerry Lavorne, one of my mentors and teachers, does it. He basically phases out 1/3 at the 1 ATR channel, phases out 1/3 at the second ATR channel, and basically phases out 1/3 at the third ATR channel, because most of the price action in trading is going to stay within the third ATR channel and the negative third ATR channel. So once you get up to the third ATR channel, at least in Kerry's opinion and in mine, I think you're kind of, most of the time, you're going to run out of gas up in that area. Not all the time. Sometimes there's huge moves. I totally understand like that, but just statistically, generally that's a good place to take profit. So Mount Doji says possibly the 10-day if the trade went down. Yeah, just as long as you have a plan and stick with it. You could use a 10-day, you could use the 5-day. This has moved pretty nicely. You could use a close under the gap day, but however it is, whatever stop you use, just make you stick with it. I mean, the bigger the stop, the more room you have to breathe. You have more likelihood that you'll stay in it if it has a big move up. On the flip side, if it does go down, you're going to give up more profit with the larger stop loss. So it always is there's always a plus and minus to everything, right? So, but the main thing is make your plan and just stick with it and don't deviate from it. Johnny says, thanks, Greg. I'm going to be away next week, and all of my willpower was needed not to buy a couple more positions today. Oh, good for you. That's a sign of maturity. It's hard to manage. It's hard to manage your positions when you're not around. Then you're always thinking about them, and worst case scenario. So I think that's a good move. Good to take a break sometime for sure. All right. Does anyone else have any questions? Anything they need some clarification on? Thanks, Johnny. I appreciate it, bud. I hope you have. I hope you have a good. I hope you have a good trip. Oh. So the Dow ended up about 38, Nasdaq 18, and the S&P up about 10. So, all right. Last call for questions. Otherwise, I'm going to get my hiking boots on and go up and hike around in the mountains. William says, would you consider using the overnight with UPro? Yes, I would, William. I can't remember, William, the last time you were here, but Steve Burns was kind enough. He actually did a back test on UPro specifically. Do you remember that, William? Were you here for that when we talked about UPro? So just in case you haven't, this is, instead of buying the S&P at the close and selling it on the open, the regular S&P, the 1 times leveraged S&P, this is UPRO, UPRO. This is 3 times leveraged. So it moves 3 times as much as the regular SPY. But he did a back test. He did a back test from partial year 2009 to partial year 2019. And $1,000 grew into over $9,000 in about 9.5 years. Oh, okay, good. So this is for you, William. This is exactly what you were asking about, thanks to Steve. So from 2009 to 2019, instead of buying the S&P at the end of the day, selling it the next morning, you buy the UPRO. Okay, so he started with $1,000. In 9.5 years, it was up over 900%. Now, of course, that is triple leveraged, but I did the numbers comparing the S&P to the UPRO, taking out the 3 times leveraged, and actually the UPRO did outperform, apples to apples, did outperform the SPY. From 2009 to 2019, the S&P approach, using this approach, was about 200% return. Accounting in for the triple leverage from 2009 to 2019, the UPRO actually was up 300%. So it did actually, apples to apples, outperform the S&P. So how's that for an answer, William? You ask and we've got it. That was just lucky. But yeah, Steve was nice enough to do that test on his own and send me the results. Andy says, in addition to your watch list, do you consider stocks that are in play for whatever reasons? Not really, Andy. Not that it's a bad idea. As long as the technicals are there and everything sets up. Yeah, certainly not a bad idea. I don't do it not because I don't think it's a good idea. I just don't do it. I just want less things to think about and look at, and the watch list that I have, I feel like gives me some good diversification, in stocks, oil, gold, bonds, and then, most of the stocks in my watch list are leaders anyway. So, I'm not saying it's a bad idea. Just make sure that, you're using correct principles, that things are lining up with your technicals. In other words, don't take an entry on those stocks that you wouldn't take on any other stocks. And sometimes, because they're in play and they're going crazy, sometimes your emotions may be able to get the better of you. That's the one bit of advice I would give you. Just be extra vigilant and patient and cautious with those kind of stocks. But as long as the signals line up, I don't see any issue with it. Mount Doji says, do you have a plan Monday morning if G talks over the weekend goes south? Well, the plan would have been at the end of the day today, Mount Doji, to make that decision. Because once it happens, it's gonna be too late. So your last chance to make those decisions, to make a plan, would have been about 10 minutes ago when the market closed. So I guess the plan on Monday is, if it hits my stops, if it really goes against me, if I have a 5% intraday emergency stop, I'm just going to go ahead and take it. That's really about all that I can do. Although, I am pretty light right now. We've got Goldman Sachs, but I'm out of about 36% of that, so that's fine. I only have 10% of the Qs left, so that's kind of a non-event. The SPY, that one is probably going to move one way or the other. There's no doubt. TLT, so I have some diversifications with bonds. I feel like if it goes well over the weekend, bonds will probably, at the G20, bonds will probably go down. If it doesn't go well, they'll probably go up, which will go against me. But at least I have some diversification. And then I have AMD and Etsy on my puts, but I have a lot of protection on those, so I'm not too worried about those. But yeah, fairly light. I mean, I don't have tons and tons of positions, and and Russell and PayPal. So yeah, half a position on Russell and a full position on PayPal. So not that heavy. So I'm not too worried about it. But I did consider that for a long time today before the podcast. If I got a lot of entries, was I going to take them vis-a-vis the G20 meeting? And I added some VIX earlier today. I forgot to tell you about that. I did add a very, very small position in VIX too, exactly for that reason, just in case there is some kind of big blow up. William says, great back test and info. Thank you both. You're welcome. Thanks, Steve. Steve's the one that did all the work on that. That was great. So William, based upon that, I've been thinking too, do I want to switch to UPRO instead of SPY? I don't know. I actually want to talk to Steve about that and get his opinion. But like I said, apples to apples, taking out the 3 times leveraged, the UPRO did outperform the S&P. But again, they're derivatives. You know what I mean? They're both derivatives of the S&P 500. Mount Doji says, I'm pretty light right now as well. My initial plan was to be out completely until the meeting was done. Yeah, that's a tough one. Because then if it goes racing up, you're like, ugh. But if it goes racing down, you're like, the smartest person in the room. But, I think being pretty light is a good middle ground, Mount Doji. But what I do like is that you are considering these issues. You're considering the big picture issues of news, and so it's a good. I like your thinking pattern. I think you're going to be a really great trader because you're thinking of these more ethereal things. Andy says, thanks, Greg. Have a great weekend. Hey, you too, Andy. Always nice to see you, my friend. Always nice to see you. William, do you use the 50 SMA the same way you use the 200 SMA as a trigger entry, close back below and back above, or is the 50 more of a support resistance area for you? William, there are some, you usually watch me do the back tests on the 50 and on the 200 and on the 200 and the 250. But let me just give you an example. The answer to that is yes. You can use the 50 as a close below, close back above, as long as it back tests well. Let's just pick the SPY here. And let's just test that. Here's the SPY close under the 50 you're out, close over the 50 you're in. I have no idea what the results are. Not that great. Buy and hold really did perform a lot better than the S&P, SPY as far as buying under, buying back over. But, let's put in Microsoft, for example. Not that great, right? So that's why I like to use ETF replay to see if IBM is closing under the 50 and back over the 50. I like to do the back test and see, how is it performed? But there's all sorts of different results with different stocks. So if something back tests well on the 50-day moving average with ETFreplay.com, then I probably will take it. But other than that, I do look at the 50-day. I certainly look at the 50-day as far as potential entries, but more so, like, for example, here on PayPal. We went long here on PayPal, but let's say we didn't go long. Let's say Monday it tests the 50. The 50 also lines up with the -1 ATR channel. If we continue to move sideways, stab down, close back above the 1 ATR channel and the 50, and then also, so let's just say it moves sideways, closes under both the 50 and the -1, and then closes back over. I may take that trade, even if it's not a V1 or V2, because it tested the 50 and the -1 ATR channel both at the same time. So you'll kind of see it. You'll see it when everything lines up, when something actually lines up. But as far as just mechanically below the 50, I'm out, above the 50, I'm in. To me, that really depends on the back test that I do on it to see what kind of results that ETF replay gives me. Does that make sense? Does that make sense, William? So basically, I don't use it exactly like the 200 or the 250, but I do use it. Works better in conjunction with other things, and or if I look at ETF replay and it back test well. But yeah, more as a secondary. But really, the 50-day moving average is kind of the first level that institutions look at buying a dip. So it is something definitely to keep in mind. Mount Doji says, I'm really enjoying Reminiscence of a Stock Operator. It's insane how well it still holds up. Yeah, it's a great book. It's a really, really good book. I've read it a bunch of times. William says, more of a secondary signal. Yes, more of a secondary signal. The book is still applicable today. Yep. William says, yes, thanks for clearing it up. Okay, hope that helped. So it'll be interesting to see where the futures open on Sunday at 4 p.m. Mountain Time. So it's either going to open up big, I imagine, or open down big. But we shall see. We shall see what happens. I do feel good that I bought a little VIX today, just as a little bit of insurance. So last call for questions. If anybody has any, let me know. And before I leave you, please do something nice for somebody today, whether it's just saying hello, giving them a smile, giving them a wave, opening the door. Let's try to combat some of the negativity that's going on in our world. And a simple gesture like that might just help. Certainly can't hurt, right? And you may make someone's day, and they may go on to have a better day, and so forth and so on. Mount Doji says, have a good weekend, sir. Hopefully there aren't more tariffs over the weekend. Take care. I don't think there's going to be. Just my humble opinion. I think the most likely scenario is that maybe there's some kind of pause again. And that's just some sources that I've read. Who knows what's going to happen? I could be completely wrong, but I think that's majority of what people think, but you never know. You remember what happened last time in South America? That wasn't good. So, it's always a risk. It's always a risk. Every time we take a trade, it's a risk. So it's important to position size, right? Always imagine the worst case scenario with your trade. If you do that little trick, it will scare you, and really feel like I lost $5,000 on this trade. It hasn't happened yet, so it doesn't feel as real. But if you can really get yourself into the position where you can really feel how bad that's going to hurt, then it will make you more cognitive of keeping your position size small. And it's always a good policy to keep your position size small. All right, everybody. Thank you so much for coming. I do appreciate you coming to this channel, spending your time with me. I know there's a lot of other channels to watch, and so I am honored that you do come and spend some time with me on this. And I hope it's helping. I hope some of this is rubbing off. I hope it's positively impacting your trading. And so if you have any other questions over the weekend, feel free, send me an email. It's in the description of this video, or send me a direct message on Skype. So, all right. Well, I guess that's going to be it. Thanks again, and hope everyone has a good weekend, safe weekend, and hopefully see everybody back Monday during the last hour of the market. So take care, everybody. Bye-bye now.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.